Okay, I'm Dennis Hudson at orangequant.com, and I'm updating the earlier PV indicator instructional video because we have added things to make it safer and easier to trade. On the website, orangequant.com, you can see almost daily snapshots of the PV indicator, and PV stands for price violence. It's something that I developed, and there's a story about it on the web page. It's our way of saying thanks to the public for having supported the site for so many years, and it's absolutely free. You can go there and look at the snapshots. We don't want your email address or this or that, but it will help you in your trading. And by the way, before I get too far afield, and this is unrelated to the PV indicator, I was looking over at oil, OIL, the ETF, OIL, and you know, that thing looks like it's setting up for a major reversal, so you may want to go take a look. Not on my website, I'm just saying go take a look at that with your other indicators. I am getting signals that indicate a strong reversal to the upside on OIL. Just a heads up. Now, to begin with the basics, all we had at first was this plot up here, these red, green, and blue plots there. They are various moving averages of the PV indicator, which I do not sell. I do not disclose the algorithm that's underlying those plots, okay? But I do make available for free the daily snapshots. Since the initial video, we've added two important features. One is this purple line up here. It's a line that indicates anytime that green gives a signal above purple, then that's an unreliable signal. It's out of sample. The other added feature is that turquoise line down below, this one here, and what that is what we call the warn line. Warn as in a warning. And I'm not going to try and explain the red and gold moneymaker lines here. You can study the charts that are available at orangequant.com to figure out what those mean. Actually, I'm not fully confident of their meaning yet myself. But here's what I do know. According to this indicator, we have two kinds of rotation in the plots, clockwise and counterclockwise. Now we're only going to focus on the green and the turquoise. The green is the shortest moving average of the PV indicator. It's for day-to-day trading. We aren't even going to spend time on the slower ones, the red and blue. So just pretend red and blue aren't even there for now. Now here's what I mean by rotation. I'm going to draw a box around a particular pair of rotations right here, and so that you can see what I mean. Alright, now there's that little black box, and you can plainly see that green and warn rotated anti-clockwise, that is counterclockwise, okay? Whenever they agree, that is regarded as a very strong and playable or bettable signal. If they disagree, like one rotates clockwise and one rotates anti-clockwise, we call that no bet on our scoreboard, and it means you just can't, I'm not comfortable making a call on it. So a counterclockwise rotation means you can go short from today's close, and tomorrow you'll make a profit. That's the bottom line. A clockwise rotation means you could go long from today's close and make a profit sometime tomorrow. Note that we're not at all concerned with the actual direction of the market, or whether it's going to be a red candle tomorrow or a blue candle. It's just whether or not you'll make a profit based on an entry at today's close. Now, having said that, before I go one step further, I typically will not enter on the day of the signal. In other words, I won't enter at today's close. That's just in my mind. I know whether to go long or short tomorrow morning sometime, and tomorrow morning I generally will get a better entry than if I entered at today's close. So whether you're playing options or straight up trading the S&P 500 some kind of way, that is how I do it, and it's up to you how you want to do it, obviously. Now let's look at a clockwise rotation, okay? And I'm going to draw for you a clockwise rotation thing here, another black box. You see this right here, okay? Now that's a clockwise rotation. It means the market goes up from there, and that signal being generated, not market goes up, again, it's just that you will, if you entered at the close of the day of that signal, then the next day, and if you entered long, the next day you would get a profitable exit. So let me draw a nice bright green line from that signal, okay, which is right there, up to the price action. So that's the day of the signal. This first blue candle here, that's the day of the signal. And you can see that the next day, price really went up. Or I should say, you got a profitable exit the next day based on the signal day's close. Now, as in this case, sometimes waiting for entry until the next day can be a difficult call, and you would have to use other indicators to see what's about to happen. What I mean is, that next day, it opened well above the signal day's candle, and so, you know, the forecast was already fulfilled at that point, and you don't know if it's going higher or what. And from this chart, we really can't tell what the intraday action was, but anyway, if you were using other indicators, you would have known how to trade this. So anyhow, the signal that was given was validated. Now in this one back here, this second blue line here, they both rotated counterclockwise, which means the next day, if you entered on the day of this signal short, you would make a profit the next day. And just to kind of make this clear, let me change that second blue line to red line. Oh, can't seem to get that to work for me. Well, let me work with another one because that one's actually hard to see. Let's go over to this one. Let me set up my cursor right here, and you can see that both of these were counterclockwise. Warren and green rotated counterclockwise, and if we draw a line up from there, I'm going to draw a red line up from there from the signal. Hang on here, bear with me. That's the signal day right there, and that counterclockwise rotation says that if you entered at the close of the signal day, you would get a profit. If you entered short at the close of the signal day, you would get a profit the next day, which the next day it opened well below that previous close, and on a short that would have been a profitable trade. Now when Warren and green disagree, as in this last instance way over here, this last pink line, vertical pink line, you can see that green rotated clockwise and Warren rotated counterclockwise. And here's what happened. I got to move this down some out of there. Okay, what happened was, here was the signal day, and they did not agree. Had you gone with green, which was indicating a long entry, okay, because it rotated clockwise, had you gone with the green, with that, the next day you'd have got burned over here on this gap down, okay? So that's how the system works. Now, there's even more to the Hudson PV indicator than we've already talked about, And I want to point that out briefly here. We'll just be another couple minutes. I know you have millions of dollars to make out there and you're busy. Okay, this concerns the invasion of the upper PV plots by Warren. In other words, Warren invading red, green, and blue. And I went back, I looked back over a year of data, and I'm in a trade right now based on this. As you can see here, where I'm hovering, Warren came up and pretty much invaded the region where red, green, and blue were traversing. And what that signals in some 13 out of 16 trades, it signals a reversal to the upside. And I'm sorry, this chart is a little bit too tall. I don't want to make the video too tall, so I'm going to have to move up. Just pay attention to this line right here, this first gray line, vertical gray line, and you can see there was a very strong reversal to the upside. There it is, okay, and it just keeps going up like that. Okay, let's look at the other one now, and I'm going to go down and show you the signal. But here's the other one, and within a day or two, that second gray line, you had your reversal to the upside, and this is the SPX data right here for the S&P 500, and that was a signal, that second gray line. Just pay attention to the second gray line. As I slide this up, you can see how Warren was invading. There's your second gray line. Warren was invading that region. Third gray line, Warren is invading the region. And actually, there is a link on the site at orangequant.com, so you can sit and study this particular phenomenon, this particular chart, and you'll see this. And so there, the third gray line, I'm going to slide this up a little bit, and you can see that reversal in progress, how strong it is. Now that's 13 out of 16 times. A couple of those times the reversal was a bit slow, like this pink right here, okay? It said it's going to reverse. It took like more than a week to actually start that reversal. And the same thing with another, this one right here. Now the last pink line over here, this was one time out of 16 times, and you can see the signal down below. Hold on here. Here's your signal with Warren coming up and kind of invading that region, and then it did not reverse. Instead, you see it just all collapsed. It really got very ugly. But that's one time in 16, which is a very, very good outcome. In other words, about 94% reliability. Plus, you had two times where you had to wait a week or two. Okay, so you know, you can take that off if you want to. As it now stands, that is as of yesterday, Thursday, November 17th, 2011, I made a long entry. Actually, I bought some contracts, some option contracts, on the notion of this invasion right here, and I'm expecting a reversal within a couple of days, okay? A strong upside reversal. Again, you can see a chart of this. There's a link to the chart on the website, orangequant.com. And finally, here is our scoreboard since we installed the Warren line into the algorithm. As you can see, so far we're running it right 6 times, no bets 5 times, and wrong. We were wrong once, but what it was a break even. So I score that as wrong because after all, you do have brokerage fees. So all of this, these scores were as of yesterday, Thursday, November 17th, 2011. All right, thanks for stopping by. Come on by the website. There's more to learn about the PV indicator, and it's all free. I'm Dennis Hudson, orangequant.com. Thank you.